Welcome to Edison TV. I'm Arian Cole and I'm joined by Jim Williams, the CEO of Arian Silver Corporation. Jim, thanks very much indeed for joining me. First of all, can you tell me briefly about the company and where it operates?
Yes, we're Mexico-based, silver mining in Zacatecas.
And just explain for me more about the assets in Mexico and also the business plan.
We have 8,000 hectares in total of assets in Zacatecas state. The biggest one is 6,300 hectares, which is called San Jose. And we're now producing about 500 tonne a day. And within the next 24 months, 30 months maximum, we anticipate ramping up to 1,500 tonne a day of silver production with lead and zinc attached as well.
So what's the outlook for silver prices at the moment and how's that going to affect your operation?
Right now, silver is between $23, $23.50 an ounce. 2 years ago to this date, it hit $50 on intraday trading. On the toll mill operation we currently have, silver right now at best is break even. So we can't afford really to have any much of a lower silver price than what we have today. But that's the reason why we are looking to build our own custom or bespoke plant to bring the cost of this, cost of the operation down. Going forward, I can't really tell where silver will go. All the fundamentals are there to indicate silver will increase in value. We have the Americans printing money, we have the Europeans printing money, the Japanese are printing money. Everyone's printing money. It's called quantitative easing. And the more quantitative easing there is, metal prices should, in theory, go up in price.
You've just released a new technical report. So what prompted that?
Recently, we had a request from the British Columbia Securities Commission to amend the report of April 2012. The issue with that report, which is totally independent from us, it was done by independent mining consultants, cross-reference the report done by the same people in April 2009, and what's happened since then, of course, is the economics have changed, actually for the better, because silver prices and lead and zinc prices have gone up. So we've been asked to basically update the report, amend the report, so to speak, to bring that into context right now. And recently the British Columbia Securities Commission asked us, told us to issue through an RNS the fact we were updating the report, and now of course that's been filed.
You've been toll milling and you're planning to buy a custom processing plant. So how's all that going?
It's going very well. We've been toll milling since the latter part of 2010. We had a very good run up until the middle of 2012. We had a well-known dispute with the first toll miller, the Contra Cuna mill as it was called. We're now toll milling with the One Raise mill, but ultimately a toll miller being a third-party owned operation, we're at the behest of what they want to do, and their goals are the same as ours. That is to make as much money as possible, so at best we meet a middle of the road. So the only way to overcome this is to purchase and operate our own, what we call custom plant. It's bespoke to the operation, and it will be built basically in your backyard at the mine.
Jim, what would you say are the main issues facing the company in the next 6 to 12 months?
Right now we're working on a financing package, so a significant sum of money. We want to minimize any dilution and therefore have a greater percentage of that finance package through debt. So really the short to medium term strategy for the next 30 months or so is to ramp up the mine production from 500 tonne a day to 1,500 tonne a day, purchase the custom mill we've been talking about, and then put that into maximum production all within 30 months.
Jim, thanks very much indeed for the insight into your company.
Thank you.